Welcome to the Master the Margin podcast, your dose of pharmacy accounting and tax topics to help you take your pharmacy to the next level. Welcome to another episode of Master the Margin. This is we're still in the asset section, so to speak, Kathy, here. But today's topic is capital lease versus operating lease. So I guess that is a liability, but we were kind of brainstorming as we were talking about fixed assets, how this would come into play. But say you buy a robot and you're financing it. Is that a capital lease or an operating lease? An operating lease is one way to look at it. I think is it's just a rental agreement, so to speak. You're paying a rent payment at the end of the term. It's no longer. It goes back to the
vendor.
Or
they offer you an option to buy it out at the end of the lease period.
Mm-hmm. That's right.
So for like $20,000, they'll let you buy it out after you've rented it for 2 or 3 years.
Right. And the capital lease is a lease where you're making the monthly payments for a set term, but at that end of the term, it's essentially yours. Mm-hmm. Maybe you pay $1.
Yeah.
So that would be a capital lease. Now, the lease itself under a capital lease, for example, most leases are capital in the pharmacy space. And how those work is that asset it's an asset to you. So the robot is a fixed asset. It's depreciated. It's written off over a period of time. And then the lease itself is a liability. You're making payments on it. You're writing off the interest expense. The principal is going to decrease the liability owed to the vendor. Go ahead, Kathy.
And sometimes that payment includes sales tax, interest, and sometimes a maintenance fee, a monthly
or an insurance could also be in there.
That's right.
So you do need to have that breakout, and you do need to make sure sales tax is being picked up.
Amen.
In one way or another, whether the vendor's doing it or you have to pick it up. Important piece there. You don't want an audit, sales tax audit, which are quite common. And, they find a piece of equipment from 3 years ago, $150,000 robot, no sales tax was paid on it. So you don't want to find yourself in that situation. But so the capital lease is, even though you're leasing this equipment, you still get to write it off, still get that deduction. But you're paying it off over a period of time. One thing with capital leases you got to watch out for, other than sales tax, is that interest rate, Kathy.
Yeah, because sometimes they will really nail you with it.
They will hide that rate in that payment. Oh, yeah, it's just $150 a month or whatever.
You need to specifically ask what that interest rate is, because you might be able to finance it with your bank at a lesser rate and still end up with that piece of equipment, but at a much lower monthly payment because of that interest rate. So definitely investigate.
I think that's about capital leases 101 there, Kathy. I think we covered that pretty good. So operating leases, again, not very common in the industry. That's more or less a rent payment. The whole payment is essentially just a lease expense type situation. I guess we could get into vehicle leases and whether to purchase or lease a vehicle. That could be a topic for another episode, Kathy. That'd be a good one. But anyway, appreciate everybody listening in to this quick episode, and we'll see you next time.